Every one of us should always be open to take the less knowledge and help them advance their knowledge into the future.
You can lead a horse to water, but you can't make him drink.
The future never happens. That's locked in. Now I have this money I can reinvest at a lower price point once it kicks back. If the bull run, or if the bear market comes in, I've now got significant amount of capital to play with, where my initial investment might have been, significantly lower than this. If I were to ride it out, I mean, I don't even have to do this, but look down there. My price target never hits. I've got nothing. So what's the harm in taking? And look at that percentage, though. 50% of all that I have. That sounds like a lot. Like, why would I cut myself in half on the way to my target? But if you look at the numbers, it's actually not that bad, not that different. Also, the whole guarantees you put something in your pocket. I can do other examples too, but I haven't actually run through this, so it might get a little messy. But if you come in and you just keep cutting it down as you go, I had those questions. Like, if I take a little bit out, I was always scared of taking profit because I wanted to hit my target. And I knew if it's going to hit this price and I didn't have, X number of XRP, I can't get that number. But it's not that drastic. So going through all this, if you take 50% at each of these price points, then you can net here. So let's say we didn't do that and we just waited for this one. It's actually pretty significant, but keep in mind, these at any point, this next price target might not be in the future. It might not be in the cards. So you're guaranteeing, lock that in, lock that in, lock that in. And then maybe it doesn't hit this last one. Well, you've got that. So go you. But if it did, and we didn't do this, okay, well, how much different is that? Not too different. A little more significant there, but I don't know. I don't know how many people intend to completely wipe out their positions, but if that's an option for you, then you're banking on a future possibility of this when you could do it that way. That's like, I don't know, 50, a little under 50% of what you could have theoretically. But this is where the question comes in, is what's your target? So if your target is something like a monthly amount, there's, and I was thinking of this too, like hold it forever and then sell at your one target, take your lump sum and you're good. That's, in the past, that's how, that's like the only thing I could think of basically to do. But now we have DeFi. So if you wanted to take a lump sum, you could put it into a stable coin, taxes aside. You could put that into a stable coin, and if your future target of, say, this never comes, you've locked this in, and during the entire bull market of, say, the last one was 3 years, now you've locked in enough money to gain at an 8% APY monthly, you're getting $400 a month because you took this out along the way versus getting nothing and just riding out the bull market, wishing you'd have taken some money off the table. So if you figure out what your targets are, either monthly or a lump sum, you come in here and just plug in numbers and figure out where it falls and what can get you there. So for me, I put, this is my own personal opinions here, but I think that this is highly likely to happen this year for this particular asset. This could happen, but it's a little more of that, like, could be pie in the sky. This also could happen, but there's a lot of variables that go into it, and there's no way I would risk or hedge like a huge percentage of money on trying to hit these price targets. So for me, I'm going to try and keep my take profits here in the green, and then maybe project a couple out within this area. And these numbers, you can change this too. Like, if you don't think that's reasonable, then that's fine. And then this here, just adjust. So for me, I also, for XRP, I want to hold long-term forever a certain amount of XRP. So as I'm coming through here, taking XRP out, I'm just trying to make sure that this number never goes below my target. So
something that I thought of thinking about this is there's historically levels once that are passed, right, in a bull run. where it's never revisited, right? And that's usually on like fib levels. So maybe there is a period where once it's past a certain price point, right? Like if you got in under said level, you know you're going to be positive no matter, well, not no matter what, because manipulation is probable, but like high probability that you're never seeing that price again once something has happened and then you're in accumulation. Maybe that could adapt into your selling levels if that makes sense, right? Like once we crack this point, like it influences how much you need to hold for your long terms, right? Or you're just looking to add or keep a steady number in your long term holds, but like that could also factor into when do you start selling, right? Maybe you start selling higher percentages of your portfolio the further above that said price gets, right? And that's debatable and takes some fin analysis and like other factors like that. But typically in any asset, there's a point where as long as there's utility and adoption behind it, you're not going to see that price ever again, right? Like we're not going to see what was it before this cycle for XRP, like under a cent. I think it was 17 after the SEC lawsuit. Like I think anything under 30 cents is probably pretty safe. Like we might tap it, but like you're not going to be liquidated on your Nexa or anything like that kind of place. So I don't know. It's just maybe something to think about. I don't know how that would factor into this, but it could definitely set the floor depending on where you got in. Like, oh, did you get in over this level? Okay, then maybe you need to be more conservative. Did you get in under this level? Well, how far under that level? And as the cycle continues and confirms or deconfirms things, like you might have it be elastic a little bit, but just something to think about.
Yeah, that's a good consideration to make. That's going to have to be based on everybody's individual thing, their position. But say, for example, like what you're saying is maybe you bought in at this price here and you're looking to take some profits. Well, it's probably a really good idea to start taking them sooner than later because of how far above that, base, maybe this is the base level you're talking about. We're already well above that. So if you don't take profits now, you're probably going to be red for a while. But yeah, that's all based on the technical analysis.
That's a good point. Yeah, I guess that's the part I left out is there's a price where you never see it again. And then there's kind of a level where once you get above that, selling it is less risky because in the long term, there's a good chance it will wick down to rebuy there later. So
Yeah.
there's a price you'll never see again, but there's the price where the floor is pretty likely to be. And so that might help people. It's like, okay, so if you look at the charts, you look at different assets and you say like, hey, here's the level it did revisit. Here's the classic retracement. I know there's like part of it where it's like some people can risk to hold more long term, if they're really like, or what, utility could really change this, which it might, right? It could definitely change it. But until that happens and we can watch the regulations and adapt based on that, if regulations don't happen, here's the likely area. If racial regulations are happening and they're happening in your favor for your asset, like, okay, maybe you lean a little bit into holding a little bit more, but you still want to take profits. But you're right, like there will still be a band where it will retrace. And so selling above that or holding further beyond that gets much riskier. So you're getting to your point, what you're talking about. Like the higher above this band you get, the more risky it is of leaving profits on the table, like you said. So like, how do I not put myself into that hole?
Yeah. It's in that aspect, it's kind of like a rubber band. The more resistance levels you break through, the tighter the band gets. It's about to snap back. But
yeah, but that's like the purpose of the red, yellow, and green, right? I mean,
yeah,
for you.
yes,
Yeah.
for me, exactly. So it's also the potential that these targets ever actually get hit. So, like for example, well, if XRP right now was $10, that means I was right in my assessment that it would hit $10, but I was wildly incorrect about my timing. Like it took 4 or 5 years longer than I anticipated. So during that time frame, if we're taking profits off, then you're guaranteeing you've got something in your pocket while you're waiting for this to happen. So I do think these will come. And like NorCal was saying, if you're invested in a token that has utility, it may, once it passes certain price levels, never come back. And that's just due to it being utilized and the natural growth of it. So that's another thing to consider too, where you have this number is like, how much do you want to keep forever? And the point of this spreadsheet is how much does this actually need to be? That was the thing. So if I'm coming in with 10K XRP, I thought, okay, well, if I want, this price target, then this number has to stay 10K the whole time. I can't sell a single one. And I was overestimating the impact of taking a large percentage early. So even if it did run straight through all these price targets, and I took out 80% here, we'll say, well, yeah, this is about double. So if I took the rest here, that means over the course of all of my XRP being sold, I net 160K in dollars. If I were to come back here and change this to, say, 50%, that's not a huge difference. And I get that in my pocket in the meantime. So it doesn't actually hurt that bad to take profits as much as I thought it would. Because I was focused on wanting this number to be as big as possible, but really, in relation to my target, taking profits there doesn't hinder this as much as I thought it would. So if we were to take this off, I mean, this is the thing that was catching me up. If I don't take anything, that's an extra 70, extra 90,000-ish. But if I'm taking, what was that, 80 before? Yeah. But I'm basically taking a loan out on that from the future. And I'm losing, a little bit here, but during the downtime, if I'm incorrect about timing, this could be 4 years from now. So would I be happy having this for 4 years? Gives me the opportunity to do both buying in at a lower price or buying another asset or staking or APY as a stable coin.
You got to think too, as like the dollar changes in value, right? The residual incomes will be worth more over time, right? They'll stay more relative. So there's like an X factor to that. But I think, yeah, it's a good point, right? There's a trade-off to it. Also, there are pullbacks in the cycle. So selling off 50% or 80%, a level, half of what the other rest would be sold at, it gives you some powder for these times where things just are inevitably going to wick really low, and you can just place some lottery bids or stink bids at low points. You're like, yeah, I'm going to risk like 10K here. If it drops all the way back down to here, like I'll pick up another bit of this asset, or I can invest it in something else to make me more income. Or, I think the X factor too is also like, how do taxes come into play? Because that is actually going to be a big concern for a lot of people. But it does like beg the question, like, what are people's goals? And there's multiple ways to get there. But I think the main point that you make that a lot of people fall into not realizing is if you pay yourself along the way, it really doesn't affect your long-term profits as much as you think you would.
I have a question. If you were going to stake your profits in a stable coin, it's my understanding that the stable coins are backed by different things, and I need to do more research on this.
You're right, different stable coins are backed by different things.
I think Daya is backed by gold. So I need to do more research. Like I said, I'm looking at stable coins and where I'd like to place some of my profits and what would be the best option.
So something NorCal and I were talking about earlier too is we don't have all the data right now. We don't know what every stable coin is that will ever exist and what it's ever going to be backed by, or maybe every US dollar stable coin, if the dollar tanks for whatever reason. We don't know. We can't predict any of that. But what we can do is we could take new information as we gather it and make more informed decisions. So as you research DAI, you might discover that there's something about it that makes it better than a US dollar stablecoin, and that's a better option for you. Maybe RI is a good option, or it could be the Flare Finance stablecoin, which is backed by multiple different stablecoins, could be a good option. It's based on your own research and what you know at the time and the information you have and your personal situation. All of that goes into effect because there's just so much more information we can gather along the way. And as I was telling NorCal earlier, that's what's great about this group is we're not teaching people, oh, here's the best stable coin. Here's what you should probably do with your money. Here's the profit targets you should have. We're not doing that. We're teaching the fundamentals. We're teaching the things that go into making those decisions, and everybody can inject their own data. Your brain's really smart. So what we're doing here is just trying to get people thinking. And really, this was just my personal spreadsheet that I started building after I listened to multiple different content creators on, taking profits and how they develop their portfolios along the way, when they take money out, when they add more back in, what they do along the time frames where they have cash on the side, all of that. So this was just opening my mind to what is the actual impact of taking profits. I believe that it's negatively impactful to take profits until it hits the target that I wanted, my end goal. I was under the opinion that that was true. I'd put the spreadsheet together, I gathered more data, I did some what ifs, and I discovered that for my personal situation, that is absolutely not true. It makes plenty more sense for me to take money out along the way, even if it's a large amount, than
Hey
to
guys,
just let it all ride.
Yeah, I agree. This is really great. And I think it takes a lot of the emotion out of it. If you have price targets like this, you're not going to be selling and buying, and, it just removes all the emotion.
Yeah, you've got a plan.
Yeah.
I have a question. Actually, I have a couple questions regarding your sheet.
Okay.
Can you reverse the order on the side? What you did here, can you can you add another column to it and do the same thing but going in the opposite direction on the side?
So are you asking, you have a price target that you want to hit, and then it tells you where to take what amounts to make that happen?
No, the reason why I'm asking what you're doing is say, for instance, someone wanted to use this sheet, and it's a very good sheet by design. There's a lot of utility and function with it. The reason why I'm asking, though, is say, for instance, instead of using price points to what you're doing now for going in future events, say, for instance, we use it for max target range, like, say, for instance, what was it, $1.90 within here a couple weeks ago as far as XRP?
Oh.
So say if you maxed out price points going back the other direction, and you started using that as a factor to where you're tracking it, and then you started noticing the trend going back the opposite way, and say, for instance, you started using those price points to go back every 5 or 10% to start scaling out and accumulating that way, you would have an option to do so. To where, one, you're taking profit, and two, if you're able to reverse it, you can use it going both ways for more coin accumulation. Sort of along the lines, not necessarily short-term trading, but coin accumulation, utilizing it going both ways. Like, say, for instance, you don't want to use 10,000, but say, for instance, if you started out with, 100 or, 200 coins, and you had those prices to where you bought in, say, at 60 cents, okay, and then it topped out at, go all the way down to where it's 190, just go down to $1.90 if you can without having to change anything. If not, it's not that big of a deal. But what I'm saying is, though, with certain variables like that, where if you do the math, it would give you price points to where you could start catching the gains off that top, because you never know where the top is going to be. But once you start noticing the downtrend or bear market starting to happen, which is what's happened the last couple of days, if you were able to have another, say, going back the other way, you would have price points to where you could start pulling out and capitalizing that way too. And then when you start noticing then again, using the same thing, it gives you price points to start buying back in. So more coin accumulation going both directions. You could utilize it going both ways.
So Zdro, I got a question for you exactly on that lines, because I was wondering if there's other parts that could be injected into the spreadsheet, like RSI levels, because if you follow RSI, right, it hits a peak and then it will retrace, and then it hits the same RSI peak, but the price goes much higher another time, if not 2 more times. And that could be an indicator to pull into a sheet like this and say, okay, it's now retraced to the same RSI, same level, but the price is going higher. And that would be your indicator automatically. So like for people who aren't into TA or don't want to follow every single chart, you could just API pull it in as a data point and say, okay, like automatically now I'm just going to sell these out and then reaccumulate. So like my total coin holdings will automatically be what they will be. And then you can have ladder buys or other systems below that. But I'm curious, what do you think about that kind of approach? Because Shiru and I were talking about that briefly, putting the RSI in here too.
You can do it both ways. You can have an input like that to where an RSI can be inputted, or you can just simply go off price action, which is what I was trying to do. That way, if you go off price action, all you do is you have, whether you want it to drop down 5% or 10% for your points. You can utilize it both ways.
So Z, are you saying that...
I came a little late. Is there a link to the spreadsheet?
Not yet.
Yeah, we're working on. Shiru is sharing his magnificent creation that he is divulging right now. I'm not sure if he's going to give it up yet, but there's a lot of a lot of ways this can be used in a lot of different variables and factors. So
that was the thing. This was my personal spreadsheet that I used to figure out what profit taking looks like as far as impacting the end result.
Right.
And I assumed that it was much greater of an impact than it actually is once I put this together and took a look at it. So Zdro, what you're saying though is you're wanting to look at, okay, well, this is great if the price is always increasing. I can see what targets are. But what if the price hits a certain target and then starts to bounce downward? When do I want to scale out to conserve the profit that I have made?
exactly.
Okay, gotcha.
Exactly. Because then you're using price action against itself, and you can utilize it both ways going in any market direction at any given time for more coin accumulation. That would be one way to look at it. But you could use it for profit taking as well, though, too.
Okay, I will work on something like that. For now, I don't do VBA coding. I just do basic formulas in here. So that's why there's so many lines, and why this data just repeats itself is because these are just formulas based on the data to the left. If I could create variables and get complicated with it, I wouldn't have to do this. And then I could run math like what you're saying, where I could reverse things easily. Truth is, the math behind it does get a little complicated. So
It's not even necessarily that, but realistically, a person, all they have to do is have a spreadsheet like this. They track the run going up. They know at a certain point it's either going to stop or it's going to hit resistance. And what you do then is you then calculate it going down from there. You have your buy point, which is where you bought in, and then you have the factor to where it ran. And then you can adjust and do math, every 5% or 10%. And start from like where you started there at 60 cents all the way down, say it was $1.90. And then you just basically interject whatever percentage points to buy in and out. You don't have to overly complicate it with the math going that way. You can. It doesn't necessarily has to be done. I mean, if a person just whips out a calculator and does the price points, say it was $1.90, it hit every 5%. I'm going to do the math from $1.90, start subtracting, and then you have your price points to where you're going to start pulling out. Like I said, you don't have to go complicated. You can do self-injection without you trying to overwork yourself, trying to get the math and the equation and the algorithm done. I was just simply saying using it as a tool for utilization for price points going an up and down either direction. Like if you wanted to test it and you started off with 100 XRP where it hit $1.90 and then you started cashing out all the way, and then all of a sudden it stabilized out to a certain point. Say it dropped down to $1 and now it hit $1.10. Well, then, okay, you're like, now starting to run the other way. Let me buy here. Let me buy there. Constantly utilizing it to where you're able to buy and accumulate more coins at a cheaper value going into selling and buying, depending on how you want to switch it. It's just an idea. So
the nice thing about that, Zdro, it kind of like lays out for people the ladder approach, right? Because like what I was saying, the ladder approach really changed things to me is like, I need to time the top and I need to buy the bottom. And if I don't buy the bottom, I'm missing out. And if I don't sell the top, I'm missing out. Whereas the ladder approach is like, it really becomes more of like playing video games. I'm just like, okay, like what are the logical resistance? What are the ways this is moving? What are my targets? And it actually plays into what Shiru was saying. Like you catch that low wick with 20% of your money. Great. If it moves in price action beyond that, then you just buy in. But the ultimate thing that matters is your coin accumulation or cash out, or, if it's a mix. But if you do those over time consistently and focus on that versus, I didn't sell the top or, I didn't buy the bottom, which is crippling versus enabling, which is ladder buying and selling, it becomes much more like, wow, like I can actually accumulate a lot more, a lot faster than I realized. And the more people do that and see that, which I think is the goal for everybody in this space, is like you can accumulate a lot more than you realize, and you can pay yourself a lot more than you realize. And then having a HODL bag is important too for people who want the leverage against it or just got in at really good entry points, right? But I wonder if you think about like how the ladder approach factors into that kind of mindset or this kind of part of the spreadsheet.
Right, and it absolutely would work because you're selling out at its high points coming down, and then once your points have either been hit or met, you're basically done. And then what you're doing is at that point, you're watching for the chart to where the bottom or floor begins and it starts going back the other way. And then what you do then at that point is you reverse it in the other box. Bottomed out here, I see the trend is starting to go in this direction. Say it went 60 cents and then it went to 65 and then 70. Momentum, everything still looks good. I need to get my first 5 points now going in once it hits 75 and so on and so forth. And that will keep you buying to where you're accumulating. But say, for instance, it starts going back and reversing back down. Well, that's okay, because then you then flip the chart again and you realize, okay, I bought in this much, it flipped on me, but that's okay. We'll accumulate either back down or we'll hold and see what it does. It gives you options as opposed to being stuck, whether it's going to moon or not going to moon, and just riding the wave, so to speak, up and down. It's going to be a little bit of work, but it can be done.
Yeah, I think the other part too is like in crypto, we get spoiled with gains, right? But never underestimate multiple stringing together of 20% to 30% profits, right, over time, which can happen due to price action, like you're saying, really rapidly. So someone could go and double their bag over 2 weeks playing 20% price actions. Whereas before, you know, we're told, hey, don't trade, like hodlers make the most money, which makes sense for most people because most people emotionally buy into green candles and sell when things capitulate. I think a good percentage of us here have been accumulating long enough to see at least some of these trends play out, but we might be missing out on these gains, which I appreciate Shiru for building this chart because, yeah, we ultimately, the more collectively we can accumulate, insulate ourselves and pay ourselves along the way, as well as make our bags bigger, the more we can do within the ecosystems we're participating in.
And so with that, you're definitely on the right track. Now, here's the thing. Imagine we have a sheet like this, okay? Say, for instance, it's live. Shiru, again, it's a beautiful by design, whether you should or not, up to you, buddy, or not, but it's definitely worth its weight in gold. The other thing is this. Say, for instance, now we have all 5 parts of the ecosystem. Mutual is going to be a little bit more harder. So you know what? We'll just make it simplify. We'll do 4. So say, for instance, we have all 4 parts of the ecosystem to where, well, actually, we're just going to drop it down to 2 because we don't have the other parts of it yet. So let's just use Flare Loans and Flare Mine, okay? Depending on how this spreadsheet is used, say we have a spreadsheet for both sides. And say our accumulation per week or per day or whatever it is, if we don't want it to get restaked, say, for instance, there's better buying opportunity going from one to the other. And you're swapping in and out, say, once a week or every couple of days to whatever's giving the better position. That would be one way in the ecosystem to utilize that to where you know one is paying a better APY because either people are jumping out of it or 2, the interest rate for whatever reason that it's being paid out has gone higher. See, being able to spot trends like that, which we'd be able to do with a sheet like this, again, would be some work, but you would very much be able to do that way. Say, for instance, we know we get paid 10 every day at 10 o'clock in the morning. Where do we put our coins? Do we reinvest and say to a single coin pool, or do we look at both pools, see what the calculations are as far as interest, what's being paid daily or paid out, and make the best decision from there? I'll be like, okay, well, this one's paying a 1% higher right now. So the best point would be whatever our accumulation is from Flare Loan and the single coin pools would be then to utilize the APY that we've collected at that point and shove it into there, to knowing that we're going to make more going into the next day. And we would be able to bounce back and forth between the tiniest percentages, even if it's even under 1, and still utilize that for maximum benefit, because now you're taking those tiny percentages and you're utilizing them against themselves. And you're taking those little tiny percentages and you're able to now exponentially do it daily to where you're like, okay, I know this is paying out better here, so I'm going to go here today. Oh, it changed 2 days from now. Oh, now this is paying out here. Now I got to throw all my earnings that I accumulated from here. And if you do that, you'll be able to bounce back and forth to gain the maximum outcome going from one to the other. So your money is always constantly making more money, or in this case, always constantly building and making more coins, so on and so forth, to where the best possible outcomes could happen. That is a strategy we were going to be getting into, but with what Shiru has done here, now is a good time to go over it.
Liquidity pool inflex points too, Zdro, right? Like your price action. It's like, okay, what are the key areas? Like obviously we've discussed a lot about, you know, when the mainnet launches, that will be a huge advantage for people willing to stake long-term in the liquidity pools, because if we're trusting that the network is going to provide the utility that it does and the money that will be flowing into it, like there's a point where you can't lose. It's like one of those price points that will never be revisited. You will have, and I like that you took it here, right? Because this is kind of like on my mind, but I was like, this is too complex. But there are so many different aspects. Like you said, there's 5 different aspects, and like having those also present, where is the best way we can put our money to work for itself based on our goals depending on what the price action is doing, which is, and there's a way to break that out. And then you can say like, okay, risk versus long-term hold versus, because I view the liquidity pools as more the long-term hold, right? Like you just get in at a good point because the volatility might be higher, but the utility is going to rise. The yields could be massive on that side. But like on the other side, there might be better ways to make the money work for it, especially if we're out of a bull market, right?
Right. And you have to look at it this way. Okay, you got to figure within the first month, going into, say, liquidity pools probably isn't going to be a bad idea. Yes, you're going to suffer permanent loss depending on which it goes. But here's the thing that you guys need to realize. Liquidity pools go into effect. You're going to have everything from us, the little fish doing our thing, to where there's going to be gigantic whales influxing great sums of coins. At that point, the fees off that kind of a turnaround, yeah, you're going to make a killing at some point, depending on what pools you're going into. Not a bad strategy. Again, something we were going to go into later, but we can talk about it now. Yeah, there's so much different ways for us for utilization to go forward to how we're going to try to figure out, do we do liquidity pools? Do we do single coin farming? Do we do the loan process? There's so many moving parts. It's going to be hard, very, very hard to keep track of. It can be done. The work is going to be there, but it definitely can be done as far as a monetary gain value. Absolutely. But again, it just depends on what one is comfortable with. Some people, with what we're talking about right now, as far as trying to do more coin accumulation with the sheet he just made, a lot of people may not be comfortable with. A lot of people may want to buy, hold, and forget it, and just use the simple snowball effect of accumulation that way. That's perfectly fine. For those that are more aggressive, though, this is where a lot of the conversations are coming into play. You guys are going to have to figure out the psychology of what it is that's going to let you sleep at night. You guys are going to have to figure out how much capital that you want to bounce around. Are you going to want to figure out and do the math each day to see what the best price points for whatever part, whether it's be loan, single coin, or anything else to go into? I think a lot of these tools, resources that we're talking about right now are going to be made. I think the first step was taken today by what Shiru is already doing right now. I think a lot of these tools are going to happen for us, and we're going to have access to these things. I think it's going to be made very, very easy from the people that are able or have the knowledge to do spreadsheets like they're doing right now. I think we are setting ourselves up in a good position. We're a little ahead of where we need to be, but that's okay. These kind of topics, when they happen like this, is very much a good thing. You guys are able to see different light bulbs going off that have absolutely nothing to do with the ecosystem or the papers or anything else that we've been doing, but you guys are now seeing ideas and thoughts come to life. We can utilize this in a lot of different ways, depending on what it is that you're after. Again, it just depends on what you're after.
Yep. Ultimately, it comes down to, like he's saying, this is just a way of introducing new data to your mind to think new thoughts. People aren't born creative. They're not born geniuses. Your brain just gets introduced to more information. You gain more understanding. You become more creative. So that's the whole point of this, was to put in the data. What does it actually look like when you run the numbers? And then how do you feel about that? Does it still hit your targets, or you can tweak it a little bit and just lays it all out and you can look at it. Like he was saying with the Flare Finance ecosystem, yeah, you could put out a spreadsheet that shows all the different data points of how much you could make at certain areas. And I think Banjo shared that already. He inputs, hand jams all the data, but then it shows him with the amount of money he's currently got, what's the place he could put it to gain the most yield. And that gets really large and complicated as a spreadsheet. But if we're building little things as we go, and the knowledge is there, like to pull the data and make decisions based on your own situations, having more data gives you better decisions, or the ability to make better decisions.
And something I want to bring up here too that I think was important is, if anybody has heard the grain of rice story with the chessboard, and this relates to Shiro saying like how much you can actually take along the way, and it really won't negate your ultimate end profit, right? Selling off along the way. The story is, right, there was the Chinese emperor and he had some guy who helped him figure out a problem, and I'm totally shortening this story, but I'll give you whatever you want. What do you want? He said, get a chessboard and get some rice. And he goes, okay, so I'm going to put 1 grain on the first square. And there's 64 squares on the chessboard. And he says, and I just want you to pay me the same amount of rice it would take to double on every square. So 1 grain on the first square, 2 grains on the second square, 4 grains on the third square and yada, yada, yada. And by not even the end of the chessboard, they're like, we don't even have a place to fit all this rice. So what it really does is like for all of us, yeah, exactly. Shiru just illustrated. Thank you. It breaks it down to, even though you're paying yourself to your risk tolerance along the way, you can also smartly set yourself up over the future, depending on how the ecosystem evolves or doesn't evolve, or, you know, we will, I'm sure, given how much we research into other platforms, even outside of Flare Finance or the XRPL or beyond that, you know, there are ways to make your money and there's many ways to split it. And I think these spreadsheets it's a great start because it lets you realize, like, and I think the biggest hurdle mentally for me to overcome was pay yourself along the way, please, because it really doesn't impact the total returns unless you're cashing out all the way, right? Like that's different, but like paying yourself along the way doesn't hurt because your total return gains are really kind of end up in the same ballpark. You know, if you just pay yourself what you need, and what I mean by that is, like, if you were in crypto and you think to like what a financial advisor would tell you, or you think about like how, you know, before crypto existed, what was a nice windfall. And I think like getting back to that mind space and that keeping that relativity in investments is important because, like, you know, we all have different needs and we all have things that will make our lives stress free, that will allow us to invest unemotionally, or at least as little emotion as possible. And I think that's what we're all trying to achieve here. And so what happens too is the more assets that come onto these ecosystems, the more assets we can trade and the more asset cycles will become available to us through tokenization. And what I mean by that is cryptos are going to boom through this year into utility, but there's also assets, you know, that go in opposite or, you know, at different cycles. So there's always something that's moving, and I can see these spreadsheets will get more and more complex, and I'm getting way ahead of myself, but don't ever underestimate the small steps of financial gains, right? Because they compound over time on top of these amazing gains that happen in, you know, 1 year, 2 years, which we're all benefiting from greatly right now. But, you know, I think keeping the bigger picture too, and saying like, you can still pay yourself along the way and still get to where you need to be, and probably much, much, much further than that, right? If you just take a long enough view. So I think the spreadsheet is flipping awesome because it was a visualization of a problem that I had solved myself, but not with data, right? I just realized like, oh, I've been paying myself along the way, but I still have, I told Shiru, I was like, it feels like the magic money machine, at least like in the last like 6 months. I just, you know, we need some money, take it out. I keep a little bit in for taxes, and it's so small, like I'm just waiting for like a lot of my bigger targets. But along the way that I paid myself, like I watched the dip today and I was like, well, crap. I hope all my stink bids got filled because I'm sitting pretty and, you know, we're good and I'm not stressing and we're still up overall. So I think like putting ourselves as a community in that mindset and being able to invest that way lets us really benefit from the whole ecosystem in a way that a lot of people will miss out without realizing it.
Correct. And also too, though, guys, the reason why, again, the spreadsheet is a good point and example with what Shiru is doing, you can make adjustments to the sheet at any given time. Say, for instance, you have a new run-up. You simply go at the lowest endpoint, you add the run-up, and then you do the math that way. The spreadsheet is ever evolving with price change. And once you can do that, then you have your simple calculations of where you start to take profits from that top run-up, and you start working your way back down. And it would be the same thing going back up once you see it beginning to level out and start going back the other direction. All you do is simply change the price points of whatever the current price is. Like say, for instance, here, if you look where he's at right now, it's at 380, but say it did run up to 5, okay? And it leveled out. You start going back the other way to start accumulating your profits, and then you wait for it to see, is it going to go back to 380? Well, say it doesn't stop at 380. Say it levels out at 450. But then you start to notice the trend swings the other way. You're like, okay, it just hit 460. Everything still looks good. The momentum still looks good. Let me start buying every 5% now going forward. And you can do that, and your accumulation will always continue to grow, going in both directions. Because while you're selling out where you can be, you're never going to make maximum profit. You're never going to find a top. That's impossible. But you don't have to. If you can find the top and you have it at the very bottom and you start working back the other way, well, then that's great. 5%, 10%. So you're taking those chunks, those 10% out every step of the way. Well, that's money you just put in your pocket. And then you wait to flatline. And then it starts to go back the other way. Well, guess what? That accumulation of where you have it sitting in a stable coin, you're now buying back in at the XRP. But guess what? You're now buying more of it. You're not throwing all your money in at once. You can if you want to. There's nothing wrong with that. But it also gives you price points to where you can start buying in higher and higher and higher in accumulation and keep going the other way. You have a lot of different ways you can angle this. By all means, if you see a flat line and you're like, okay, this is it, and I'm going to buy all in at once, you can do that. The only problem is if it, say for instance, it does that 1 or 2 days, you're going to throw yourself in a position to where you overextended and you weren't paying attention, and now you're back at a negative. So having to do it with price points, in this case using percentages for buying in or buying out, protects you. That way you're not throwing yourself all in at once and you're not taking yourself all in at once, and therefore you have both options to play going in either direction that you can utilize for your benefit. Something for you guys to think about. Again, good stuff. Very, very good stuff.
So Z, while you were talking, I tried to plug out what you were saying. So if you sold 1,200 tokens at $3.80 and you bought them back at 5% intervals on the way down, you would end up with this many tokens compared to how many you started with. So you sold 1,200, bought it back at $3.50, you now have 1,300 tokens. And if this was a different, like 2%, it adjusts based on this. And then over here, where NorCal was talking about the flipping of gains, so if you start with $100 and you do 15% each time, you do it 30 times and you're at $5,700. But a lot of people get caught up in, okay, well, I want $5,700 from 100 in one go. So the percentage they need for that is much more. It's like 57,000, right? Or 5,700. So you need that percentage gain on one chart, on one trade in order to hit your target, or you can do it 30 trades at small percentages. And these are locking in that profit along the way. They're guaranteeing that if you don't do anything after you do this, you're still sitting on that much, which is 2.6x. Versus if you ride it up and then you just don't touch it and then it dips back down, you're losing money along the way as it goes when you could have taken profit and tried again somewhere else. So it just goes to show that small percentages go a long way.
Absolutely. And 5% moves weekly, 5% move dailies, even on some coins, is very, very much realistic. Trying to shoot anything above 10% on a certain coin daily is unrealistic and very, very risky. Do not recommend it. Up to you, but do not recommend it. But even still, even with the tiniest percentage points, say for instance, you're very, very conservative and you just want to do 2%, you would be able to do it. And as you can see, over time, you would have accumulated, and if you were able to do it over 30 points, you would have accumulated 78% gain. That's not bad. That's actually very, very good for 30 turnovers. So there's a lot of different ways this can be utilized, that this can be played, whether you're super conservative. A little riskier side, I would probably say, would be 5%, would be my comfortable point that I would want to do. But again, this gives you the options to where you have these abilities to do so. For value point for me, a lot of you guys are aware, I don't care about the dollar value. For me, it's more accumulation of coin. It's like this. Had I started mining 5 years ago back where I wanted to with Ethereum, where I should have, my life ultimately would have been different had I not listened to the bobbleheads and said, it's not worth mining at this point. Don't do it. Knowing what I know now, yes, things would have changed drastically. So here, you guys have the opportunity now to do that. You have an opportunity in a way of which you guys are being presented in front of you. You guys can accumulate very, very easily. And without throwing yourselves or, having to use thousands of XRP or thousands of dollars, you could start off with $100 and just start seeing how it works with you, how well you're comfortable until you get used to the whole entire process. But then once you get used to the process and you're able to utilize it, well, guess what? You can accumulate as much or as little as you want at any given time. So very, very adventurous tool that he's putting together, guys. A lot of value involved with what he's designing right now.
And as you can see, that gets big real fast. So that was 60 iterations would put you at 25,000 from 100 doing 10%. Adds up quick. Yeah, and this for those of you that came in late, this is the DeFi stuff now. You can get stable coins, and before, if you didn't hit your end goal price target of a lump sum and you had to wait through the bear market, you're sitting there with nothing or a lump sum of a fiat, which isn't as bad. But now there's DeFi, and you could throw a lump sum into that for 8 to 12%, depending on what you're doing, where you're doing it, and you could be pulling a monthly yield off of that profit that you took riding through a bear market.
Wait, and then just to confirm, you don't have to pay taxes, right, when you transfer?
Sorry, you're really quiet.
Stablecoin?
Sorry, Future, can you ask the question again? I didn't hear.
She cut out altogether there at the end. I think she's having connection issues.
Something about a stablecoin.
Yeah, I think she was asking about the tax aspect. It's the accumulation of taxes feature. Yes, every time you go from a coin to another coin, it is a taxable event.
Yeah, so that's why DeFi is kind of attractive too. If you don't have a lump sum or a price target that's a short-term thing where you need to absolutely take this and put it in your pocket, you can take the asset itself. So instead of this, you throw I guess you at this point you'd have had this much. You take, say, this is XRP, you have 760 XRP, you could take that and put it as a minted F asset or in the Flare Finance ecosystem somewhere where it's gaining a yield. That's not a taxable event to move it, as far as I know. And you gain the yield and just claim that on your taxes as income. So you're not paying lump sum taxes, which could be big depending on how much you've got. And you gain the yield and just pay traditional or standard income tax.
That's correct. Yeah, transferring from one, it'd be like transferring from one wallet to another. In this case, we're transferring it from XRP to FXRP. It's still the same asset as defined. That law could change. Hopefully not, but we never know. Going from Bitcoin to Bitcoin is not a taxable event, going from one wallet to anything else. But any type interest that you earn or any type of fee that you get on it or so on and so forth, yes, that is always going to be a taxable event, just like airdrops are a taxable event at the value of whatever the drop was when it happened. So for everyone that's getting ready to collect Flare, that is a taxable event. We are going to have to be very, very mindful to see what the president price is set at when it drops, because we will have to pay taxes on that. So yeah, something we're going to have to pay attention to.
Zdro, do you have any thoughts on Hugo's comments as of late as trying to drop it at zero value? I mean, I've never seen an airdrop land at zero, but I think they're trying to address the initial airdrop by doing it at $0 or zero value.
That's what I understood. Zero value drop.
Right. And with that, the only way they would be able to do it is they would have to set the price because it's their airdrop. I think they would be able to pull it off that way. You have to remember, Uniswap dropped. It was at somewhere right around $4 was the price point that they started it at.
To 7 and then crashed to under $1 and then where it's at now, right?
Right. But the initial start value was right around that $4 range, which is what the taxable event was. What it did in that price, it doesn't matter at that point whether it goes up and down until you sell, obviously. If you sold at the dollar mark, well, yeah, you obviously brought that $4 down with it, but you also took a hit too. So to me, I don't think that was worth it. But because they have the starting point for this, that's scary for two reasons. If they do start at zero, they have the option to do so. It's their coin. They have the option to try to set the present value of where they want it. Here's the problem, though. The people that are buying in at all those IOUs right now, they're going to take a hit, and they are going to be downright. They're going to be pissed off. Because if you're buying, say it was at $2, which it was a couple of days or a while back, and now you have a coin that drops automatically at launch to zero, yeah, you're probably going to reclaim that value over a very short time frame. But at that initial drop, you took a hit to where you could have bought in a whole hell of a lot cheaper than $2.
But the IOU is not connected to Flare. I mean, that was a side job. You know what I mean? It had nothing to do with Flare.
Right, but I'm saying how people are going to perceive it, though. That's what I'm getting at.
Right.
Yeah, they're going to.
I wonder if that's part of the parcel, right? They're like, are they trying to weed out the people who really are trying to get into this, or are they leaving enough clues like, hey, we're going to drop this at zero, and so you can trade Flare, use Flare, and I know a lot of I get what you're saying, Zdro, right? It can cut both ways. There's people who are trying to do it just to make some money, and they're like, oh, it's going to airdrop, and I'm going to sell on the pump, and then that's it. Or people who are trying to accumulate now, knowing the value, right? So there's two sides of it, but we play a risky game because we get our 15% of our snapshot right off the bat, and it's 3% every month after that. Don't quote me because I have no clue. If it does start at zero, it would be an interesting, just from my view, it's an interesting case study, right? Like what happens when you airdrop something at zero? I've never seen something drop at zero. So I'd be curious, does it shoot right up based on value? Does it stay low? What's the supply? I don't know. I'm actually really curious to see how this goes for many reasons.
Well, no, and that's the thing. If it does drop at zero, and if that's to be the case, you better believe I will have something sitting on the sideline as we get closer to buy in. Because if I can pick this up at 0 point value to where we're not even in penny value yet, oh yeah, if I can accumulate a couple million that way, you better believe that price is going to get driven high, and the orders are going to fly on that thing exponentially right out the door.
Why? Your wall
OG, you're roboting, bud. Can anyone understand OG, or is it me? He's roboting pretty bad.
He's going robotic today.
Yeah, OG. Not one word came in through, bud.
I guess the next step is like, what will be the most liquid exchange to buy them off if it does launch at 0? Because I would imagine, a good portion of people are going to just hold based on what they see in the value of the ecosystem. So it's only the people who are selling who, I don't know. It'll be really interesting because would you sell your 15% of your snapshot at like fractions of a cent?
No. And a lot of people aren't. That's what I said. That price isn't going to stay low for long. If you were looking to buy at that point, you would have to jump on it seconds, literally seconds, trying to get your buy orders in to get filled. Because that price, it's not going to stay that low for long. Probably even a matter of maybe a minute if we're lucky. It will be interesting if they start off at 0. That will be very, very interesting. This is where I'm saying a lot of people are going to be extremely upset if their value that they paid $2 for a coin for something automatically restarts at 0. They're going to get their value back, I would imagine probably within a day or two, maybe even within a couple hours. But they're still going to be pretty upset because now they have to wait. If they were trying to get it to where they bought in, say, really low and they were waiting for the initial start so that way they could wait for the price points to sell, they're going to have to wait a little bit. They're not going to be happy. They're not going to be happy about it at all.
Can you catch me up? Because I just got off work. Was there some news about this or something?
We were, Shiru made a spreadsheet that we were doing some calculations on as far as over time accumulation of either coin or wealth, depending on how you want to view it, or how it could be utilized in different aspects as far as like a coin accumulation for weekly or day trading, things like that. And then we're into the point now to where we're talking about possibly starting the airdrop, where Hugo has already hinted that the value of the Spark token will start at 0. And the conversation that was being brought up was right now was, well, what about all the people that bought into the IOUs? Their value of it is going to come back, but starting off with a coin where you pay $2 and it's now starting at 0, where people were probably hoping to either sell out at that point or waiting for it to drive up, they're going to have to wait a little bit. I'd imagine at some point a lot of people would be pretty upset. They'll get over it. It's not going to stay down in value for long. So
it does benefit the people who bought back when the IOU launched, right? Because it was so cheap compared to where it is now. Those people who bought fat stacks of IOUs when they first launched on BitTrue, I think was the first place, they should have taken some profits, right? Seeing what Hugo said, it would make sense for them to take profits and say, oh, well, I'll sell half my stack and use it to make more, yada, yada, yada.
Yeah, I would be selling. I would probably have I would have money set on the side wherever. I don't care if it's Poloniex, BitTrue, whatever, and trying to get in whatever price points, especially underneath, if it's underneath 10 cents, even underneath a nickel. Oh, yeah, try to jump on that as fast as I possibly could at market. The more exchanges it gets on, the faster the price is going to be driven up. That goes without saying. You got to remember, look how many exchanges onboarded for their airdrop.
Dodge out on it now.
Yeah.
Hope everybody had a little bit on the side to buy the dip today. I bet nobody had enough.
I don't think it's done yet, bud. Yep, I don't think it's done yet.
Yeah, I had a couple stink bids filled that last week. I didn't know if they were going to be possible, but even just looking at the long-term trends from before the last 2 months, like XRP, 70 cents is still in play on a lower resistance. So, there are opportunities. Do we want them filled? Maybe not. But if we see it go to that low, I think we also see that is a huge opportunity for a big rebound, right? Play the ups and downs while it consolidates or retraces for sure and see what happens.
Yeah, it's a very interesting change of events here as of late. Be interesting to see how this plays out beginning of next week.
What trips me out, though, is the exchange is shutting down as a given, but then they keep certain channels open and everything dumps or pumps over months and months and months at the same time. So it's I wish we could know who was actually dumping and pumping all these things. But it makes sense to me that the exchanges make money when they liquidate people. So it's in their benefit to be shady. Just from a business model. And then the markets are so interesting. The people who claim to protect us are definitely not doing their part by any means. I don't think tweets from anybody makes markets tank. tank, no matter who they are, or pump. So, I mean, I'd be curious to hear what people think about that, but it's definitely, we have to pay attention to it. We're little boats on the sea.
The only people that are protected in these type of situations are only one type of people. It's the whales or the industries that have so much capital involved. They're the ones that are being protected to protect the system that by design. And what I mean by that is very, very simple. Look at the laws that are going to be set in place from what the people did with AMC and GameStop. They're going after these people, not the companies, not the corporations, not the billionaires. They're going after the people, and they're putting laws in place that will never allow people to do that again. So what does that tell you? If the people got up together and banded together like they did, and they put these hedge funds out of business, why are they now cracking down on these same people if they're supposed to be protecting them? Well, you have to remember, in this place of business, I don't care if it's stocks, I don't care if it's crypto at this point, or anything that has asset controlled value. The system is rigged, and it is rigged for the people that are in controlling of assets, whether it's physical as in businesses, or physical as in currencies, or anything else that has value. They're the ones being protected at all times. It's not us as individual people. That by design never has been. You have to remember, in order for the United States to function, we are by design a socialist/capitalistic country. A certain way to prove that is very simple. For people that cannot afford system, we have Social Security for when they retire. We have Medi-Cal, Medicaid for medical for when these things happen. For the people that are on the other end of the spectrum, they're either so comfortable and secure in their wealth, or they're rich, they don't care. To them, it doesn't matter. By design, this is how our country has been made. We are the best and worst of both aspects, of both socialism and capitalism. But it was designed to be so. The ones that are being protected are very simple. If you're poor, you get everything in the world for free to a certain extent. If you're rich, well, you're rich, and therefore it doesn't matter. What difference is it going to make to you? You can go out and do whatever it is you want to do anyway. But as soon as people got wise to what was happening and how the rich were doing what they were doing, and these billionaires and everything else, and the people stood up and empowered themselves, the first thing the government did was, oh, no, you can't do that. You put these poor businesses and you made these poor billionaires bankrupt and broke. You can't do that. And to ensure that this doesn't happen again, we're going to find the people that were responsible. They're going to go on trial to see if any laws were broken, and then they're going to get fined. So they say. Well, if it's protected by the people, and the people are the ones that did this, theoretically, nothing should have happened. But yet it is. Laws are being put in place to where what happened can never happen again. So there you guys go. Now you know who's protected. It's not us. I can tell you that. Now, if we ever get into the position where we become, and say, for instance, XRP does moon or hits whatever price point that you need, and you do become part of that good old boy club, well, guess what? Those laws by design at that point, because you did the work or you put yourself in a position to where you threw money to have coin and so on and so forth, you now become a part of that club. But again, in order to do so, you have to get there first. The laws are against you until that does happen. Taxes are against you until that does happen. You know, Warren Buffett has said it many times, oh, raise taxes on me, raise them up higher, go for it. The part Warren Buffett doesn't tell you is he only gets $100,000 per year at Berkshire Hathaway and a regular paycheck. His main money accumulation to how he sustains life, how he's able to have a house in Laguna Beach and so on and so forth, is by stock options and stock accumulation of dividend from other stocks that he owns. Well, guess what, guys? Anything held over 1 year to current law, guess what his maximum tax is? 15%. Yeah, he's saying raise up taxes on the 100,000. By all means, go for it. To him, he doesn't care. Now, if you were to say, well, let's raise taxes on dividends and your business incomes as far as what it is for capitalization on your returns for dividends, he probably would be singing a different tune at that point. One other thing as far as a tax bit, and this is going to be my last little rant about it, just so you know, 2008, 2009, Congress was ready to make all dividend income tax-free. You guys heard me right, tax-free. Anyone want to take a guess on who went to Congress and said that was a very, very bad idea. Actually, at the time, it was two of them. It was the two most richest people in the world at that point. I've already said the name of one, which is Warren Buffett.
Bill Gates.
Bill Gates is the other. That is correct. We were at a point in time where our government was ready to empower the people to let them on board to what the rich had been doing for years in a non-taxable event setting. And as soon as that happened, the richest people in the world shut it down. Kind of makes you wonder why, huh? Well, the answer is very simple. If you empower the people to where everything becomes a level playing field, to where, let me invest like Buffett, that I don't have to pay any taxes, and over time accumulation, I become a millionaire like him. Well, guess what? You are now diluting that power and empowering other people by design. It's not supposed to happen that way. So you better believe they were against it from the get-go, because now it would have opened up too many doors for other people. It would have opened up too many other ideas for other people to get involved, and that scared the hell out of them. So they shot it down. Anyway, like I said, just more information, more facts for you guys to be aware of. Because I was all over that time. I was a big-time dividend investor then. I still am now. I was excited. Oh, boy, was I excited. I was like, oh, this is great. I just throw everything I have in for wealth accumulation into dividends and tax-free. I can live off that. I just send all my paycheck to that. I was ecstatic for it until it got shut down. So NorCal and Shiru, guys, thank you for sharing. Shiru, whether you share the spreadsheet or not, Bud, it was a blessing either way. It's opened up a few other ideas for me and a lot of different perspectives of how to look at things going forward. I hope you do share, but ultimately it's up to you. So,
I brought it to the attention of the community to try and simplify it so that I could put it out there without giving this run through that I did, and people could just look at it and figure it out and it makes sense. But that was probably going to be a little difficult. So I'm kind of glad that everybody jumped on and had an opportunity to look at it, because now you've already gotten the rundown. You know how to use it. You know where you can modify it and what the whole point of it is. The whole intent was to share it from the beginning. I just didn't realize that everybody else had the same questions that I did, since I had built this for myself. But I made the color modifications and all kinds of different stuff. Like, it was very rudimentary. It didn't have these titles at the top to show what each of the categories were. So people would have just been massively confused. And that's all I was trying to do, is alleviate the confusion before I sent it out to everyone.
Well, what you made, buddy, and in case you haven't realized it, is you have made a very, very formidable tool that can be utilized in a lot more ways going forward than I think you realize. Because this can get applied to different coins going into our ecosystem, can be applied to the ecosystem itself, which I've already elaborated earlier, to where we could use it against, the loan program, against the single coin farm, and so on and so forth, where to figure out to maximize. We can utilize this in a lot of different ways as far as seeing what's happening, where the herd mentality is, what people are jumping in and out of, things, so on and so forth. Very, very vital information that can be useful out of this. And then the top of it, though, now you've also opened up to where other ideas can stem from it. Like I said, trying to utilize it going both ways for more coin accumulation in the meantime. Very, very, very powerful, bud. Again, and this goes to reiterate with what you just said, though, as far as the question that you had. In this space, with what it is we're doing here, the only question that will ever bite you in the behind is very simple. It's the one that's not asked. Because 9 out of 10 times, if you have a question or you're trying to figure out something and something's not making sense to you, you better believe somewhere along the lines in this group, someone has that very same question, or if they've run across it in their heads themselves. They may have put it to the side because they didn't want to put that much effort or not sure where to go. But you better believe it's someone else is thinking of that very same thing. So I commend you for throwing yourself out there. And again, I'm very, very thankful for the tool you were going to share and that we can utilize as a whole. So I thank you very, very much.
Well, you're very welcome. Glad I could help. And I'd put in the chat also, but once I release the spreadsheet, everybody's got their own personal targets and different ideas. And like, you come out and we added the portion at the bottom for working it backwards. I hadn't thought about that because it doesn't fit into my plan too much, but other people have, different ideas, and it's all useful. So if anybody wants any assistance with modifying either this sheet or creating one completely new from an idea that you have, would not be opposed to working with you to try and put it together. I'm not a wizard, though. This is just using formulas and a little bit of a...
Sure, if you wouldn't mind, do me a favor, bud. Could you reshare your screen and re-post it back up again, if you wouldn't mind?
For a brief moment, I'm about to have to go to the store.
Okay, that's fine.
But I can do it real quick.
Thank you, sir. Appreciate it.
Okay. Should be up.
So with this, guys, like I said, with all the adjustments that have been made to the price points, that a plug-in value, this sheet can be changed and used and utilized in a lot of different ways. Whether if you're after a whole price target in itself, or if you're simply trying to swap in and out of coin for price accumulation of coin, so on and so forth. A lot of different ways. I will be curious to see going forward other ideas, including myself, of what other things that we have yet to see that can be brought up with this. The reason why I'm having you share it, even though I know you said you got to go, but is this is your creation, and for that, I want everyone that's here again just to glimpse on it real quick, because it is your creation, and the pride that I feel for you on doing so, because you didn't have to share this, but you really didn't, but you are. I want to commend you for sharing it, number one, and number two, coming up with the idea and throwing it out there. So. Guys, for you that just walked in, this is the spreadsheet that he made. So I want you guys to see where it came from. Shiru this is his baby. He made this by design. So I hope we find it useful and it serves all of us well. So Shiru, again, thank you, bud. I know you got to go, but again, thank you very much for sharing what you've created.
Yeah, this stuff I kind of find interesting and fun. Also, for a long time, I used to do spreadsheets of just pie in the sky numbers, and that's all it was. Is say if I have this much XRP, what happens when it hits $1,000, and then I just forget about it. I'm like, okay, I'm going to have that much money in the future, cool, and I just let it go. But there's a little bit of laziness to that. Once I got past that little ping in my stomach every time I thought about doing something like this and decided it wasn't important, it pinged me enough, and then I had enough 2018 pain to decide to actually stop lying to myself and do the numbers and just look at it. And the data that I've gleaned from it was not scary like I thought it was going to be. But ever since then, I just started doing as much as I could to gather as much information as I can to make the best decision possible without having too much emotion involved. I listened to that recording for those that came in after I mentioned this, the 003 recording. I was actually really excited when the topic came up for this exact idea. And I actually was listening to the recording in my headphones and then tried to talk to everyone through the Discord, but I realized it's not going to work. It's a recording. So I was kind of sad that I wasn't there for the live event to mention it then. So I tweaked this a little bit and then wanted to bring it forward to everyone since I realized that there was a need for it and an interest to have this information on an individual level.
Thank you for doing class today. I very much appreciate it.
You're welcome. Yeah, glad I could give something back to the community here.
Yeah, it's going to open up a lot of different doors for a lot of different things that we're going to be doing going forward. The idea of trying to do accumulation, to what I was saying, this can be used for any coin, guys, as far as set prices and things like that. The utilization that he just gave us with a data point, very, very strong, very, very useful.